Elections are over. Modi government has come to power for the third term. Now all the industry experts, traders and citizens of India will be laying their eyes on the next big event, the Union Budget for financial year 2025. The Finance Ministry has already started preparing for the Union Budget, but you may wonder why. Because the budget was already presented this year in February. Why is it being presented again? Well, the last one was the interim budget or vote on account. The full budget will be presented for this financial year in July. Confused? Let me explain. Ahead of the Lok Sabha elections, Nirmala Sitharaman, the Finance Minister, presented the interim budget for 2024 on February 1. Now that the new government is formed, the full budget will be presented in July. As per the Article 112 of the Indian Constitution, the annual financial statement is laid before both houses of the Parliament. The centre seeks approval from both houses to withdraw necessary funds from the Consolidated Fund of India to run the government. Interim budget is like a temporary budget that the government presents before the general elections so that they can sustain the government till the new government is formed. As there is no constitutional provision for this, the centre can choose which house to seek approval for funds for the transition period, which is from April to July via vote on account. Now, as per the Article 166 of the Constitution, Lok Sabha can take any grant in advance for the estimated expenditure for any financial year by voting and passing a legislation. Then the centre can withdraw funds from CFI. This is a vote on account. Vote on account just presents centre's fund requirements like salaries, outgoing projects and others. It cannot make any tax changes and is valid for only 2 months, which can be extended up to 4 months. While an interim budget is presented in both houses, it is also debated in Lok Sabha before passage and is valid for the entire year. So remember when Nirmala Sitharaman said not to expect much from the interim budget as it will be like a vote on account? This is what she meant. And without any surprise, there were no income tax changes in the budget presented in February. Now coming to the Union Budget. In the case of Union Budget, the Finance Minister presents the annual financial statement to both houses too. The document has to be approved by both houses and then by the President of India. If the budget is not passed by Lok Sabha, then the Prime Minister and the Cabinet has to resign. The only difference between an interim budget and a union budget is that the interim budget lists the projections and the government's projected expenditure till only June or July. The Union Budget now will be presented in July and the preparations are underway. The Finance Minister met the India Inc. on June 18 and they tabled their expectations from the budget. They urged the government to introduce simplicity, consistency and rationalization of capital gains tax regime. They also called for status quo on corporate tax rates, changes in personal income tax slabs to boost consumption. Apart from this, they also sought for continued capex push, cutting costs of logistics and doing business, introduction of new industrial policy, more PLI schemes, and increased job focus, among others. What are your expectations from the budget? Let us know in the comments, and for more extensive coverage on budget, keep watching ET Now.
If you like this video, then like, share and subscribe to ET Now.